I want to show you a video clip from last night's live stream. In case you missed my live stream last night, I did a live right here on this YouTube channel like I do 6 days a week. And I told you very specifically exactly what I thought the market was going to do today. I went so far to actually draw a candle for you. Now, this is on this YouTube channel. You don't have to take my word for it. You can go back and watch yesterday's live stream, but I did you the favor and I went and I grabbed the video clip so you don't have to do that. Now, what I'm about to show you is my analysis yesterday on this YouTube channel when I told you that I think this market has more room to the downside. I told you yesterday that I believed that the jobs data that was going to come out was going to push yields higher and push the market lower. Guys, we just hit the highest level on yields since 2006 and 2007, depending on where on the curve you're looking. So yields continued to push higher today, and stocks continued their pullback, now down around 8% in the S&P over the last 2 months as this pullback has continued. I want you to pay close attention to the clip I'm going to show you and look at the candle that I draw in this video clip. And then we're going to come back and we're going to look at what actually happened in the markets today. Joe, let's go ahead and play that clip. September is the weakest month of the entire year. The market usually goes down in the month of September, and typically in October, it bottoms, the markets recover. Now, I told you at the beginning of this live stream that in the past, when the markets are red in August and red in September, that the average performance in the fourth quarter is actually 8.8%. So history tells us the market's going to go up over the next 3 months. But I think we have to drop down and test a major support level first, and then I'm going to start looking long. We were all over this drop in September. If you guys have been following the live streams for more than a month, you'll know we've been telling you that we expected downward action in September. We were on the short side of a lot of positions in tech specifically, and it did very well for us in the month of September being on that trade. I think you have maybe another week or so of that weakness as yields continue to push. As yields continue to push, that should put pressure on stock prices. And what I'm looking for is for the markets to get to here. Okay, see this yellow line on my screen? I want the markets to get to that yellow line, and then I think we bounce. There you have it. That's yesterday's live stream. Did you all pay attention, like I said, to the candle that I drew for you last night? Now look at the candle that actually was put in place today. Folks, it doesn't get much better than that. That is the exact candle that was drawn on last night's live stream. There it is. And I said, I want this market to get down to the 200-day moving average, which is the yellow line on my screen. Guess where we got to today, folks? The 200-day moving average, the yellow line on my screen. And that analysis live with our members in the pre-market session, and then again at 10 a.m. Eastern when the job openings number came out. That's the JOLTS number. JOLTS number came out at 10 a.m. That's a read of job listings in the U.S. It came in way above the expectation. And if you were on the live stream last night, I said to you, I think we are in a scenario with yields pushing higher where it is a glass half empty situation, where the only way the markets would bounce on that jobs data is if it was in line with expectations exactly. Because I think you're in a situation now as yields push higher. If the jobs data came in a lot weaker than expected, I think the markets would have gone down because people would say, oh no, the labor market's beginning to soften. Maybe that means possibility of a recession, and the markets go down. Then I said, if the jobs numbers come in a lot stronger than expected, the market still goes down because the yields are going to get pushed higher as everybody thinks the Fed is going to raise rates again in the month of November, and they're going to keep rates higher for longer next year, which would then also push stock prices to the downside. So it was a lose-lose scenario for the overall markets, but a win-win for members in True Trading Group because we not only had one, not two, but 3 triple-digit gains today on the back of that analysis, and you got it here yesterday. You didn't even have to be a member of True Trading Group to make money today. You just have to be on the live stream last night.